Good morning, good morning, good morning. Welcome to today's morning blast. It's Friday, the 28th of February. Where's the month gone? It's me and Michael Brown. Before we go any further, let's get the legals out of the way. So nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, joins PIQ or PIQ Suite, or indeed the hosts, which as you know by now is Mr. Michael Brown and myself, Mr. Ryan Paisley. Mr. Michael Brown, how are you?
Good morning, Ryan. Good morning, everyone. I'm very well, thank you. Happy Friday. Happy end of February to everyone as well.
Oh, where's it gone?
It has flown by, hasn't
Well, maybe this week's dragged on. I'll give you a clue, but the rest of the month, yes.
it? Oh, hang on. Bear with me. Let me hang on. Let me turn.
Oh, calm down.
No, no, I've just got to turn off our very good friends at News Squawk so you don't hear Shahan
Very
over
good friends, very
the
good
Twitter
friends,
space.
very good friends. I'll tell some jokes while we wait.
Well, I've done that now, so should we crack on?
Oh, thank God for that. Yeah, crack on.
It's probably best for us all. Good morning, everyone. It was a rather grim day yesterday, not just because I went for a beer with Ryan, but also
Right.
because but because sentiment stayed very, very soft indeed. Initially, we did see stocks trading firmer, seemingly the market having relatively easily navigated the earnings figures from Nvidia, which of course dropped after the close on Wednesday. But then those intraday gains were given up and more after yet another tariff announcement from the White House, which saw the S&P 500 end the day down by about 1.5%, and the Nasdaq 100 end the day around about 2.75% lower. In terms of that tariff announcement, it really came in two parts. The first was confirmation that the 25% tariff on goods from Canada and Mexico will indeed be going into place on the 4th of March. Trump had sparked a little bit of confusion around this date, suggesting on Wednesday that it may be delayed until April, according to what he was saying on Truth Social yesterday. That is indeed not the case, but of course we are still 3 or 4 days away from this 4th of March deadline, and there is every possibility that those
Yeah.
tariffs don't end up going into place. The other thing that I think really roiled markets yesterday, and there was a significantly delayed reaction to this, was Trump in this Truth Social post, easy for me to say, also mentioned that China will be charged an additional 10% tariff on that date. And it was only about half an hour later that reports via CNBC and also via Bloomberg clarified that that is on top of
Yeah.
the 10% that was announced earlier this year. So you had 10% about a month ago. You've then got another 10% now, which you don't need to be a member of Mensa to work out that the total tariff is now
Hang on,
20%.
give me a second.
Get your fingers and toes out, and we'll work it out. So I think that was really what pressured sentiment so significantly yesterday. We kind of knew the Mexico and Canada ones were going in anyway. It was more the case that this marks an escalation in the protectionist rhetoric coming out of the Trump
Yeah.
administration. We also saw some demand coming into the Treasury curve. The 10-year yield slipped by about 7 basis points late in the day yesterday, trading this morning just shy of 4.25%. We also saw the dollar gain ground against all its major peers, with the dollar index moving north of the 107 mark, trading this morning at 2-week highs, while the euro has slumped below 104, cable slumping below 106, and also gold trading a fair chunk softer as well. I think that smacks of positions being liquidated more than
Yeah.
anything else, but the yellow metal was down by about 1.5% yesterday and is trading around 0.75% softer
Lost
in
its
early
shine.
trade this morning. Oh, dearie me.
Oh, come
Leave
on.
the puns
You-
to me round here. Come on. The other market move that is worth mentioning, because it's literally just popped up on the terminal in front of me and it's quite funny, is that Bitcoin is now down 25% from its record high that it set a few weeks ago. So the thing that's meant to be a store of value clearly isn't.
Yeah.
Anyway. Moving on from that, there were a few other bits and bobs to get through yesterday besides the tariff nonsense coming out of the White House. In terms of economic data, we did have the latest GDP figures out of the United States. GDP remaining unrevised at 2.3% on an annualized quarter-on-quarter basis in the final 3 months of 2024. I would just mention, though, some of the reason for the choppiness around the GDP figures yesterday was because of a monumental cock-up at Bloomberg. They ran the GDP price index figure as 4.2%, when the actual number was 2.4%. So even though
Oh,
they
wow.
rather hastily corrected that, I think that was one of the reasons why we saw a bit of choppiness, particularly in the Treasury space. So the Bloomberg intern is updating his CV this morning. In terms of other US economic releases, durable goods orders yesterday beat expectations, rising by 3.1% in January, rebounding from a 2.2% decline that we saw in December of 2024. And we also had the weekly jobless claims numbers. Initial claims rising by 242,000 in the week to the 22nd of February, right at the top of the forecast range and the highest initial claims print since the 6th of December last year. Digging into the data, though, this likely is more related to weather than it is to the government efficiency federal layoffs, because the biggest rises on a state level in initial claims were in New England, where it has been very, very cold recently. Meanwhile, continuing claims, they actually dipped on a week-on-week basis to 1.862 million for a prior 1.869. And of course, that continuing claims print does indeed coincide with the survey week for the February non-farm payrolls figures, which are due this time next week, which gives, and I see he's listening, Ryan Littlestone at Forex Flow, just one more week to work out how he can rig his sweepstakes so I don't win it again. In terms of other bits and bobs from yesterday, a few headlines in the tech sector. Apple, they've got themselves in trouble in France. They are apparently facing an antitrust case there. This is according to sources cited by Reuters. We also had Microsoft yesterday. They are doing a little bit of lobbying of the Trump administration. Of course, Trump is looking to tighten some of the curbs on chip exports out of the United States. Microsoft are arguing, and well, they've clearly got a vested interest in this, but I think they're probably right. They are arguing that the unintended consequence of tightening these rules is that some nations which won't be able to get their chip supply from the United States are instead going to go and get that chip supply from China, and are effectively saying to the Trump administration, do you really want to be forcing these people to go and buy from someone that you hate? And I think that's probably quite a valid point. The last tech headline for this morning is one that I do not understand at all, so we're just going to have to read this out. And that is that Amazon, they have built their first quantum computing chip. It's called Ocelot, apparently, and he or it or she contains 5 qubits that store data and 4 additional qubits to detect errors on the data qubits. I have no idea what I was hoping. Tom Talks Cars might be here to help us out with that one, but I wouldn't worry too much, because the chap who's invented this at Amazon says useful quantum computers probably won't arrive for a decade or two. So it gives us enough time to swat up on what's going on there. In terms of other bits and bobs, actually, just to give ourselves a bit of a pat on the back, we flagged the possibility of this in yesterday's Morning Blast, and that is that the activist investor Elliott are not at all happy with what BP have announced in terms of their revised strategy, which is basically to go back to oil and dump their lubricants division. Elliott saying that plan does not grow up. Elliott saying that plan does not go far enough, and that they see it as lacking in both urgency and ambition. BP shares were trading marginally firmer on the back of that yesterday. Sticking with here in the UK, the government, after announcing that they want to expand Heathrow a few weeks ago, they also now want to approve the expansion of Gatwick Airport, which is obviously the second largest airport here in the UK. This one is quite frankly farcical. What Gatwick want to do in order to, they've already got a runway. They've got 2 runways that are built. They just need to move one of them by 12 meters in order to bring it into use. And it's been caught up in red tape for about a decade, which I think sums up why we never get any infrastructure projects done here in the UK. And last but by no means least, a few headlines in terms of the monetary policy and central banking side of things. The BOE's weekly repo operation saw a record high usage yesterday at 58.2 billion. This, of course, as the BOE continue to run down their balance sheet. It is something that policymakers have flagged they are expecting repo usage to continue rising, but it's worth keeping on the radar nonetheless, because that does seem to be ticking up at a bit of a rate of knots at the moment, and may cause a few jitters here and there. We also heard from a few Fed Fed speakers yesterday. 2027 voter Barkin, he just repeated his remarks on inflation for the third day in a row, which I won't go through and bore you all with. We heard from this year's voter Schmid. He was talking about how the Fed need to balance inflation risks against potential growth concerns, and that he has become more cautious on inflation since January. So he is sticking to a relatively hawkish stance. We also heard from 2026 voters Hamak, who was saying that she sees upside risks to inflation and that policy, interesting remark this one actually, she said that policy is not meaningfully restrictive and close to neutral, which is a bit of an outer consensus call, but if you believe what she's saying, then the further cuts are likely to be relatively shallow and limited in number. If you think most people reckon neutral is about 3% in the United States.
Yes, didn't she say that we're already close to neutral as well? I'm sure.
Yes, yeah, she did. Yeah, which is a pretty hawkish remark, and also could be of particular interest because she's going to be a voter next year when they're actually trying to fine tune where neutral is. But nothing like a bit of joined up thinking over at the Fed, because we then probably about 3 hours later heard from another 2026 voter, Patrick Harker, and he said that policy is restrictive enough to be putting pressure on inflation. He believes that policy is mildly restrictive, but they need to keep a close eye on inflation expectations. To be honest, nothing particularly new from the Fed in those remarks. And last but by no means least, we also have minutes yesterday from the January ECB meeting. The ECB minutes, basically Lagarde sticking two fingers up at Schnabel, saying that it is relatively safe to conclude that policy is restrictive, but that they do need caution on the size and pace of rate cuts as the deposit rate nears a neutral level, which is, again, something that we were discussing earlier on in the week in this show. So, for once, Ryan and I think we're ahead of the game.
I was going to say ahead of the curve. We're thought leaders, mate. Thought leaders. But thank you for that. So let me rattle off a few headlines that I've managed to cobble together. So firstly, in tariff and trade kind of sphere, China's Commerce Ministry says it opposes the new tariffs and warns of all, and I quote this, all necessary countermeasures. So big ups to the trade war. In terms of Mexico and Canada, Trudeau vowed to, and I quote, immediate and extremely strong response if the US follows through on the 4th of March. Mexico is analysing further steps after imposing retaliatory tariffs on low-cost imports. Regarding EU tariffs, President Trump criticised the EU VAT taxes, don't we all, and threatened reciprocal tariffs if the bloc does not treat US firms fairly. And the EU stands ready to respond, but no new official measures announced as of yet. US Treasury Secretary Bezant is open to other countries dropping their tariffs per recent call with South Korean officials. What else we got here? Canada's AAA ratings are reportedly secure despite the US tariffs. Well, let's be honest, they'll only get moved after they're already, after the shit has already well and truly hit the fan. That's the way these... Go on.
I was going to say, it must be everyone having so much confidence in Mark Carney coming in to ride to the rescue.
I keep forgetting he's your favourite person. Data highlights, purely because it's, as we mentioned yesterday, my favourite economic data. Tokyo CPI undershot expectations, came in at 2.9% versus 3.3% expectations. Retail sales did rise 3.9%. And as I've said a million times before, the reason why it's my favourite economic data is because it is one of the true leading indicators. So Tokyo CPI comes out, and basically 3 to 4 weeks later, Japan CPI comes out, and they're pretty much always bang on it, in line. So that's a good one to keep an eye on. Commodity space, oil marginally softer, but retaining most of the prior day's gains. Reports suggest that OPEC Plus is divided on whether to proceed with an April production hike amid uncertain global demand and tariff risks. Russia and the UAE favor raising output, and Saudi Arabia is cautious. Gold currently staying under, well, as before we went on air, it was below $2,900 an ounce, pressured by a stronger dollar as traders seek safe havens in cash amid tariff tensions. Copper slid further, reflecting global growth worries and concerns that China, biggest consumer of copper, faces new US tariff hikes. Geopolitical news, Russia, Ukraine. President Trump claims a peace deal is possible soon, saying the US-Ukraine rare earth partnership would serve as a backstop for Ukraine's economy. Oh, you're right.
I am sorry.
You're right.
Yeah, I'm
He's
fine.
dying. He's dead. He's dead.
No, I'm not dead. I was. One of my colleagues has just sent me a joke, and I was trying not to laugh, and ended up choking on myself.
Well, come on. You got to tell us the joke now.
No, I actually can't.
Oh.
I'll
Right,
explain it to you in the pub later.
What's happened to me? What's happened to me right now? Trump also.
I'm now going on mute.
Trump also hinted at good talks with both Russia and Ukraine. US Treasury Secretary Bezant said the Ukraine critical minerals deal is done and will cover minerals, oil and gas, and infrastructure. Regarding US and Russia, delegations met in Istanbul to address embassy staffing levels and bilateral mission operations. North Korea test-fired a strategic cruise missile with leader Kim Jong-un, saying this ensures deterrence and ordering nuclear forces to be prepared. UK-China energy dialogue. The UK Energy Secretary Ed Miliband is set to visit China in mid-March to restart the UK-China energy partnership. Good for him. Additional headlines just before we knock this on the head and we can find out what this joke was. Market mood, obviously dollar firm, renewed tariff threats, risk currencies and crypto remain under pressure with equities broadly weaker. Nissan CEO, this has been an ongoing story. Obviously, we mention this most days, it feels like at the moment. His future is in question as a management reshuffle looms. I think we heard yesterday that he's probably out the door. Singapore freed charged with fraud involving NVIDIA chips, highlighting an ongoing crackdown on high-value technology crimes. What else we got? The Greek transport unions plan a mass protest marking the anniversary of the deadly train crash, I think it was last year. And finally, from me, Citigroup was reported to briefly credited 81 trillion in a near-miss error, later reversed with no major impacts. Now, that's a trillion with a T, so that's a hell of a fat finger.
It is, and also now I've composed myself. Didn't City did some fuck up on this scale before? I think it was with Revlon, and they ended up accidentally repaying their loan or something.
I'm so glad because I was like, I'm sure it was them that had a massive fuck up before. It was them, wasn't it? And it was Revlon.
It was,
they paid the loan back like a year early, like in full, and it was like, what? Because didn't Revlon threaten to keep the money as well?
I think they ended up being able to keep it in the end because the argument was basically, you've sent us the money. You know, what are we meant to do? I think there was a big legal challenge around it, of course, but I think they did end up actually managing to hang on to that. I will tell you what I was chuckling about because it is too funny not to share, and it's a Friday morning. I've just had someone claim that they made 1.2 billion euros by shorting Bitcoin overnight with zero slippage whatsoever.
Yeah, all right.
Yeah, quite.
I'm
dear.
Wasn't meant to be
oh, God. Right. Are you done?
Yeah, I'm done.
Oh, God, blimey, you sound done as well. In any case, then moving on to today, we a relatively quiet data docket, to be honest with you, which is just as well because things are falling apart over here. We do have some inflation figures out of Europe. We had the French CPI figures earlier, which came in at 0.9% on a year-on-year basis. That was a 4-year low on the French CPI. We have regional CPI figures from Germany due out in 10 minutes' time, and then at 1 o'clock this afternoon, we get the Germany-wide figure, which is expected to be unchanged at 2.3% on an annual basis. And of course, those figures come ahead of the Eurozone-wide flash CPI data that we get on Monday morning to kick off the new trading week and the month of March. In terms of other bits and bobs, a few releases from the other side of the Atlantic. We have the core PCE deflator out of the United States. That's expected at 2.6% on an annual basis in January. Will be down from the 2.8% that we saw in December and the lowest since June of 2024 if that forecast is realised. Also this afternoon, we have the latest GDP data from from Canada, the economy expected to have grown 1.7% in the final 3 months of last year, although, of course, bear in mind that since then Trump's come in, starting to throw tariffs around, so take the data with a bit of a pinch of salt. And then at 2:45 this afternoon, we have the Chicago PMI figures out of the States. This data for February, the index expected at 40.8, up from a prior 39.5. Although, as always, do bear in mind that data is released 3 minutes early to those lucky people who subscribe to MNI. In terms of other bits and bobs, there are no real notable corporate earnings of note. There are also no central bank speakers on the docket, so rejoice about that one. But of course, do be aware that there is the potential for weekend gapping risk, particularly ahead of next Tuesday's deadline for these tariffs to potentially go on in terms of Canada and Mexico. And of course, the geopolitical situation remains unstable as well. Zelensky is obviously in Washington, D.C. today. So there are still plenty of moving parts out there. And given how shaky sentiment has been recently, I don't think participants are going to need much by way of encouragement to trim exposure a little bit more as we move into the weekend. And last but by no means least, it is the last day of the month. Most of this is probably done already, but if you do see any odd moves, just blame month-end flows and get yourself down the pub.
Drink. Exactly that. Mr. Michael Brown, thank you as always. Thank you for a hell of a month and just being your awesome self. I'm not just saying that because you bought me a pint last night, but it does help. Guys, listeners, thank you as always for tuning in. Remember, have a great weekend. Remember to factor in the fuckery, and we'll see you on Monday. Take care.
Bye-bye.